first this half hour to the latest in finance, and we're joined this morning by Jessica Amiri, market strategist at the trading platform at Moomoo. Jessica, good morning to you. What's been happening on the international markets firstly?
Good morning. Well, it's been a pretty bumpy evening, but I'll just say a couple of key things, Thomas. So firstly, we've had the US Central Bank, the Federal Reserve. They've come out, they've kept rates on hold. That was pretty much expected, but the market was more interested in, of course, what the Fed said. And that is, Thomas, that they basically said they're going to keep interest rates high for longer. And they're probably going to make another rate hike before the end of the year. And that's all basically in a bid to, slow down rising prices, which we call inflation. But ultimately, it's really important to note that the Fed importantly said that they don't want to handicap the US economy. And I guess what he meant by that is because the market is starting to price in that economic growth in the US is slowing, and it's probably going to slow a little bit further before the end of the year and then into next year, Thomas. So that's why the Fed said that they're probably going to cut interest rates next year. So that would be pretty supportive of US equity. So I guess rounding it all out, how did the market behave? Well, it was pretty bumpy, but we ended lower, as in the S&P 500, the biggest gauge of the 500 stocks, that fell about 0.9%. But year to date, big picture, it's up 15%. So all in all, okay for investors who are invested over the long term. We did see a lot of profit taking in the largest US tech stocks that everyone's been watching. That's the NASDAQ 100. So that index was down the most out of the big indices. It was down 1.5%. And the reason for that is we saw a lot of profit taking in those magnificent seven that we've seen rallying all year. So we saw Google parent Alphabet down 3%. And then the pinup stock of the year, Thomas, Nvidia, that's the US chip maker, the giant there, their shares are down about 3%. But perspective, they're up 190%. So well done to those that are invested in that. But the important thing is they are the biggest supplier of US chips that train AI models. We know AI is the talk of the town, and that's because AI chip spending is probably going to grow at 30% for the next 10 years. So a big tailwind for chip makers there.
Okay, what can we expect on the local front today, Jess?
I guess a couple of things. So obviously because the US market was lower, choppy trade, but ending lower, our Aussie battler, our Aussie share market will probably open lower. I say Aussie battler because we've been underperforming the US market over the year, and that's largely because we're waiting for China to come out and introduce mass scale stimulus. But just getting to the crux of it, stocks to watch, I guess similar to what we saw in the US, Thomas, you're probably going to see profit taking. So people are going to, trim those profits of stocks on the ASX that make a lot of their money from the US. So what are they? Well, you've got the ASX company called Life360. They're one of this year's best performers on the ASX. So their shares are probably going to see some profit taking as well. You've got Liontown, Australia's pinup lithium stock of the year. Their shares are up 130% this year. They're probably going to see some profit taking as well. As for economic news, nothing really to report on, Thomas, or watch, but we are seeing a bit of a Conan oil drum. That is the oil price. The oil price is down 1.3% today. That's good for consumers, but the thinking is that oil prices will head higher later into the year and then fall next year. So that's something to keep your eye on.
Okay, well, we've got you there. How's the Aussie dollar looking this morning?
Well, the Aussie dollar is lower yet again, so it's buying 64.48 US cents. But a bit of a technical event occurred in the Aussie dollar, and that is that it broke out of what's called a falling wedge. And that's a technical level that that some strategists track. It basically means the Aussie dollar against the US could reverse its downtrend soon and head back to the 65 level. And that's probably on the back of on the expectation that China will come out and they'll announce some major stimulus that the market has been waiting for.
Good on you, Jess. Thank you very much for joining us. Appreciate your time. Jessica Amiri, market strategist at the trading platform at Moomoo with the latest in finance this Thursday morning.